So pressure shipping is part of the dry cargo market, and so it means that we don't carry any containers and we don't carry any liquid cargoes. And if you look at the dry cargo market, you will see that we are focused mainly in the small handy size sector of the market, as well as in the Supramax sector of the market. This is a snapshot view of the companies and its assets. So if you go back in time to December 2010, we had 21 ships, the average age was 15 and a half, and the average size was 25,000. If you fast forward to the 31st of March, then you can, of this year, you can see that we have 40 ships in the water. The average age has come down to 10 and a half years, and the average size has gone up to 34,000. Now we've also put up for you an expectation of where the company's assets will be by the middle of 2016. Because between now and then, we will take delivery of quite a few ships. So for example, this year, we will have another 5 ships, 3 cement ships and 2 64,000 tonners that will join us during this year. During 2015, another 17 ships, 13 64,000 tonners and 4 38,000 tonners will join our fleet, all brand new ships. And then in the early part of 2016, another 7 ships will join our fleet, that we will have 2 38,000 tonners and 4 64,000 tonners joining us at that time. So totally 29 ships will join us between now and say the early part of 2016. So if you take 40 ships in the market, in the water that we have, plus the 29 that will arrive, we should have 69 ships. But we're showing you a picture of only 49 because our intention is to sell between 18 and 20 ships of the older ships and the non-economical ships that we have in our fleet during the second half of 2015. Now the reason for selling these 18 to 20 ships is fourfold. The first reason is that we will be following the golden rule of selling older and non-economical assets in the higher markets. The second reason is that it will bring in between $200 and $250 million of cash coming into the company. The third reason is that we will use this money to repay and prepay a lot of our debt. And the fourth and most important operational reason is that we will release 18 to 20 fully trained operational officers and crew from our older ships who will then be able to take over the younger ships, and so we should have no bad accidents or problems in terms of having inexperienced staff taking over the new ships. This is a picture of the Baltic Dry Index, and it shows you where we are currently and where we have come from. If you look at the same picture and look at it in terms of averages for the year, you can see a clear pattern emerging. So if you look at 1985, 86, 87, you can see that was the last time we had a very big recession, and you can see 1986 was the low point of the cycle. Similarly, if you look at the years 11, 12, 13 and 14, you can see clearly that 12, 13 were the low points of the cycle, whereafter the markets have started to move up. If you look at the year 13, though it looks as a fairly healthy number, the first half of the year was characterized by a very, very low BDI with an average of only 742 points and was the second lowest in history. But the second half of 13 was pretty strong, and that is what has led to the average for 13 being in a reasonable condition. This is a seasonality chart. It gives you the average of what the BDI has done since 1985 all the way to 2013. So it is almost a 29-year chart. And you can see clearly that with China coming into prominence and becoming the manufacturing capital of the world, we clearly have a dip during the month of January, February, when the Chinese New Year holidays take hold. Thereafter, the market builds up to the month of April, March, April, and then has a small breather before the South American grain season comes into full force, and then you have a peak during the months of June, July. Thereafter, you can see that the market steadily falls all the way to the end of August, early September, whereafter the Northern Hemisphere grain season starts and the iron ore restocking story takes place, and the market peaks sometime in December. So this is the normal seasonal chart that you would see. Similarly, if you look at the early part of the year, the first quarter, and just look at that in a little more detail, you can see clearly that in the months of January, February, the market does fall, and does fall quite sharply, whereafter it also does rise, and rise quite quickly. The only 3 exception years which are blocked out for you are 2002, 2009 and 2013. In these 3 years, the freight market or the BDI never really went down at all. And the reason for that is that the BDI was already at a very, very low point in those 3 years at that stage. And therefore, there was no room for it to fall any further. If you look at the past and look at asset values, you can see clearly that other than the Capesize sector, which had already started to improve in 1986, 1986 was, for the rest of the dry bulk market, the bottom of the asset price market. And if you look at 1987, the next year, you can see asset prices have all gone up, including the Capesize, by at least 50%. Now that shows you the speed at which asset values change in the shipping market. Similarly, if you look at the years 10, 11, 12 and 13, you can see that in 13, we've already got the Capesize sector which has already started to go up, but the rest of the market has been still going down. So in asset value terms, you would say 2013 is almost identical to 1986. Therefore, in 2014, you should expect that if the past is a good guide, then asset value should climb by at least 50% during this year in 14, and we've seen quite a bit of that already. Similarly, coming to operating expenses, 1985, 86, 87, you can see that the operational cost for running ships was continuing to fall, and it didn't matter which sector you were in. But if you look at 2010, 11, 12 and 13, you can see that it's going up and not falling at all. So the pain felt by the ship owners during this recession is far higher than the pain being felt in the 1985, 86, 87 recession, for the simple reason then that costs were lower and were declining, whilst costs are here at least 50% higher and increasing. Coming to the earnings per day per ship, or the time charter rate, you can see clearly that 1986 was the low point of the cycle, and it didn't matter which sector of the dry bulk market you looked at. Similarly, if you look at 2012, you can see that it was the low point of the freight cycle, except for the Handysize, which continued to fall marginally in 2013. Therefore, from an earnings cycle point of view, it also appears that we have passed the bottom, and the freight market should continue to strengthen, and strengthen strongly in this last quarter of this year, and further into 2015 and the first 2 to 3 quarters of 2016. Coming to the supply side, as you can see, by the end of the first quarter, there were little bit more than 11,000 ships in the dry bulk sector, with an average age under 10 years and an average size of almost 67,000 tons per ship. If you look at the second portion of the slide, you can see that the Handysize, especially if you look at the last column, The handy size was the only sector